Hi, welcome everyone to the fifth edition of FINtastic Talk. Thank you for taking out time today to come for this talk, and we hope we are able to, excite you and move you ahead on your journey to be creating wealth. And I think we are living in a very exciting yet very different time. Again, after 1 year, we are back to a situation where some of us in some cities are locked down and the corona situation is becoming worse. But as they say, everything passes and there is an opportunity in everything. I think that right now the opportunity for us is about investing in something. And the first thing we need to invest in is investing in ourselves. So I would say that those of you who are working from home or back to a sort of a lockdown type of a situation, it is very, very important that you invest in yourself. Take this time to enhance your knowledge, the time we are saving traveling, the time we are saving in other things like even socializing. Take some time, part of that time, and invest in your growth, your knowledge, your enhancement, and it will reap multifold awards. And for us it is very, very important. I think one you need to do is invest in yourself and yourself as an investor. So, I, Sanjiv Bajaj, I am different, and my Sanjiv Bajaj's investments need to be different. So look at your investments in a separate light. If you are a professional, great. Otherwise, if you want to be a professional or deep dive, then there is an amazing program called Certified Financial Planner, which we offer through International College of Financial Planning. It's a global certification. Must do that. So that, because future belongs only to the people with high degree of knowledge, because we are living in a world where they are reviews. Everything is being reviewed. Everybody has a voice. Everybody's voice can be heard by everyone. Today people, even a young guy, 18-year-old, can be commenting on the Prime Minister and his work, and the whole world may be reading it on Twitter. Whereas earlier, very few people would get an opportunity to comment on anything. So today, everybody has that opportunity. So, but if you want to succeed, you have to be the best. So, if you want to be a professional or want a deep dive, then Certified Financial Planner. If you want to be an investor and are new at it, or even if you're, a decent investor, you have to have all the background information, or otherwise you will end up making a mistake. Either now or either later. And this is something I always say, that you must invest in learning about investments for 2-3 weeks, 4 weeks, do a lot of reading, learning, make it a part of your life. So you're an informed investor. Nobody can take you for a ride. Yes, you must use professionals, you must use funds, you must use wealth managers, you must use others, but you must have your basic foundation knowledge. So Bajaj Capital, to contribute to that, has launched a fantastic program. It is called befintastic.com. Please do check it out. It's a 3-week program which teaches you fundamental of investing. Then for 1 year, you are guided by an advisor who helps you with your investments, and there is no commercial interest there. And if you don't like the program, we have a 100% refund guarantee, because our basic purpose is to teach you knowledge rather than to make money from you. So do use it. It comes in different varieties. There is a teens program, which is aimed at people between 13 to 19. There is a youth program, which is aimed at people between 19 to 30s. And there is a women's program, which is aimed at women. And then there is a seniors program, which is aimed at people above 50. So depending on what is right for you, please do choose your program. Look at it, evaluate. There are a lot of other options also available, but you must do something. And today I'm very excited to have a very amazing speaker with us, one of my own personal favorites, Radhika Gupta. And I'm sure you would have heard her. If you're live, you're active on social media, Twitter, and or LinkedIn, and she is one of them, or are watching the financial media. She is one of the most prominent voices in the industry. Amazing clarity, amazing, advice that she gives. Me, I personally have made a fantastic return over last 1 year, more than 50% by investing in two of her funds, which were global funds. And basis on my talk with her last year, so I think she's a fantastic lady, a role model to so many women out there, that you can't only make it, but you can actually be leading it. So she's leading Edelweiss mutual fund, and I would so I look at her as a role model for our fantastic women's program. So whether as an investor, or you become a professional in the world, there is, for women, wealth management is an amazing area where they can either partner up with their spouses. Today only men know about wealth, and there have been this videos going around how women are not confident about investing. Why should that happen? Today they need to be partners of their spouses, and together you should be creating wealth. So without further ado, welcoming Radhika. Radhika, it's great to have you here, and it's amazing that you have taken out time to be talking to all of us.
No, thank you so much, Sanjiv and the Bajaj team. It's a delight to speak to you, and thank you for having me. And I hope everyone who's listening is doing safe and doing happy. I think these are extraordinary times for both physical and mental health. So I hope both are in good order. And as Sanjiv beautifully said, I think the best thing you can do right now is invest in yourself. I think yourself comes first.
Yeah. And Radhika, so I want to take our talk in a different manner today. I know we are all financial people and we just want to talk numbers and what's happening. But today I want to talk about Radhika as a person. So just tell us about your childhood. What was Radhika as a child like?
So very few people have asked me that. So I think what people do know about my childhood is, and I think all of us are products of our childhood. And the funny thing is, if any of you are parents or have children, we don't give our parents enough credit for our upbringing, right? I definitely didn't, but I think we are products of that. So I was born in a diplomat's household. My father was the first one from the family to get into foreign service, and his biggest achievement in life is that I UPSC rank 7th, which is a big deal. So he came from a small village called Gango in UP, and so that's how he started out. And he joined the services, and he was posted to Pakistan, where I did the first 3 years. And the way the services work is that you shift countries every 3 years. So पहले 3 साल पाकिस्तान में थे, then we were in New York, we were in Delhi, and we were in Nigeria, and we were in Italy. And you shift not only countries, but you shift continents, and you shift societies, and you shift cultures. और वो दौर ऐसा भी था where there was no Facebook or Twitter, so you couldn't really keep in touch with your friends. So that was the bad part as a kid, right? But the good part was the family was very close knit, and you got all these different incredible experiences. Now, unfortunately, when I was a child, I would always tell Papa, "What kind of nonsense profession is this? We keep having to change schools and languages, and even the plug points in each country change." So I would get very cranky about that. But of course, now I'm very grateful for the childhood I had. For one, it's made me very adaptable. I think, we are living in extraordinary times. But Sanjeev, one thing that my childhood taught me is that always be happy where you are. I remember we lived in a country called Nigeria, and Nigeria is a very tough country to grow up in. There's no electricity. You can't go out after 6 because of law and order problems. Petrol ki shortage rehti hai. Corruption humse, we complain about things in India. Nigeria is far more corrupt. Lekin people are very happy. And I think my father always said, it doesn't matter where I'm posted. We are going to make sure we have the best time there. And that's how I think I'm approaching this COVID period too. I'm going to make sure I have the best time possible in the COVID period, and my team has the best time possible. I can't control COVID, but I can control what I do. So I'm very grateful to my childhood for that.
That's truly amazing, Radhika, that, it's getting the best of everything. So even if we are to, demotivate ourselves, look what is happening, it's not going to get us anywhere. It is the best of everything, getting the best out of everything. For me, the first thing it came back, the life had actually got back to almost normal. You had forgotten the COVID time. So, for me also, my first thought was that, look, now I'm going to be more productive. At least I don't have to spend that so much time going out doing those meetings. I can be doing them from home, and it's going to be a much more productive time. And also, last year we had done a lot of right things,
Yeah.
during this time. Obviously we made a lot of mistakes also, and you did a lot of right things also. So this is the time not to repeat those mistakes, and we have to make the best of it. It's a tough time for this world, but you have to always look at a silver lining. I'm sure something or other will come out, because there is always, as they say Hindi, जो होता है अच्छे के लिए होता है. So I'm sure there is some, I know it's very difficult thing to say at this time, but I'm sure something better or something great will come out through this. So Radhika, you told us about your childhood, which is quite interesting, and I actually didn't know about it. So also tell us about your education. That then how did you go about choosing what you did? What did you do? How was the education years?
Yeah, so and before I kind of come to your question, I read these two lines, and some you may not know कि मैं poetry की शौकीन हूँ, खासकर Urdu poetry की, even though I didn't grow up in India. So I read these two lines because you said this in Hindi, that better times will come, and I just wanted to mention them, and then I'll tell you about my education. And they said कि शाखाएं रहेंगी तो फूल भी और पत्ते दोनों आएंगे, ये दिन आज अगर बुरे हैं तो अच्छे भी आएंगे, which in Hindi basically it means that if the branches stay, then trees and fruits and everything will come. And I think the branches today are health. If health is there and spirit is there, then the good times will come. And I think that's what it says. I think coming to education, so I think, like many people, I didn't do what my parents wanted me to do. And I think, my father for many years never forgave me for not joining civil services. But I was in ninth or 10th. I was always a good student. And I think I decided I wanted to study abroad. My mother was very ambitious for me. And if you are a father of a daughter or a mother of a daughter on this call, I think, they were very, very ambitious. I think they felt that I should get the best in the world. So I decided to apply to college abroad. Now, it's interesting, college in the US is very expensive. I think at that point it was $45,000 a year, and the rupee was probably at 40, 50. This is another reason you should invest in international funds, by the way. But we could not afford the kind of education. So I found out that I could try to get these scholarships. And my school people told me it's extremely rare to get scholarships. And my mother said, it's rare, right? But kisi ko to milti hongi. And she said, well, I can't do be that one person. And so that's how I applied. And I landed up at Wharton. I did my engineering and computer science. And my college education opportunity changed my life. I was one of those rare kids who got a US education without having to pay much money for it. As I said, I am a product of my mother's vision, really. But that was my education. And then I spent the first 4 or 5 years of my career in the US. And I think a US undergrad education gives you a lot of exposure to the best in the world. So again, I'm very grateful for it.
So my team was telling me that you really like in your talks this Hindi muhavras and those Hindi shlokas. So they wrote one for you, which I'm going to read out, and I'm actually really bad at it. And so don't laugh, Radhika, if I'm not. So, they wanted me to read this out. They said, कुछ उलझी सी है, तभी जिंदगी है, सिर्फ हसीन होती तो ख्वाब होती. So, it's amazing. So this Wharton. So how did the career proceed? You started with Wharton, which is an amazing this thing. So I can understand where finance in your blood comes in from, because Wharton, I think, adds that to everybody's everybody who goes there. So so how did your career proceed? After that, there's so many people who aspire to be a CEO or MD one day, but very few people make it to that level. So Radhika, what would you like to tell people? What made you, what should they be doing, the youngsters today who are watching this talk? What are the right things that they do in their careers that will help them reach the position of a CEO, MD, entrepreneur, running their own business? How do you achieve that?
So I think there are a couple of things. And Sanjeev, I don't think there is a formula, but I'll tell you what at least I believe. And the first thing I would say is, and I do these polls on social media, and the most common thing youngsters tell me is, I come from this background. I don't have and I had a great education, right? I don't have an IIT, IIM label that's going to hold me back. This is going to hold me back. That's going to hold me back. And I want to tell you, okay, none of this is going to hold you back. The first thing I want to tell you इसके आपको बड़ा सोचना पड़ेगा. You have to be really ambitious in your head. Now you mentioned CEO. Sometimes media does these interviews with me and they ask these things like, "Acha, did you think you'd become a CEO?" And they expect me to have a very Miss India like answer and like hold my cheeks like this and say, "No, I never thought that would happen to me." I have always aspired to do well, and I think aspiring to do well, aspiring to be the best has to be the starting point, regardless of what your background is. So you can believe that remember what my mom says, what if you are that one, right? You have to believe that you can be that one. So I think that is the first thing, that you have to dream really big. If you dream of being a cricket player in this country, it's hard to play for Team India, but you aspire to be Virat or Sachin, right? You don't aspire to play in the Ranji Trophy, even though there's nothing to take away from the Ranji Trophy. So aspiration to यहाँ set होनी चाहिए, फिर बाद में देखते हैं क्या होगा. And I think the second thing for youngsters is not to give up. We live in a time, and you know this, where attention spans are very short. 15 second का ad YouTube पे होता है, तो we wait for the 5 seconds to skip it. That is also there with jobs. You have 6 months of failure. You have one bad boss. Youngsters will tell me, I'm not feeling motivated after 1 year. I mean, I've seen my parents spend 30 years in a career. I always think, and a boss told me this, a great career means going through prolonged periods of hell and just surviving. And it's like great investing too, right? You'll go through prolonged periods of hell, but you just have to survive. So think big for yourself and be prepared to go through prolonged periods of hell. And I think thirdly, don't wait for the right opportunity. Take the opportunities that you have and make them the best ones. So don't wait for the best thing to come across. Whatever you have in front of you, because life is unpredictable, right? So my career is just making the best of what was offered to me.
That's very well said, this thing. So my key takeaway, Radhika, so what you're saying is that just focus on today. Focus on doing very, very well at what you do and have an ambition that I'm going to grow. So, so at the end of the day, you have to play every ball as itself. And this is again my own learning, that whenever I've wanted something and I've started ki ye to mujhe karna hai, I've generally not been able to do it. But when I've said that I don't care, but I have to be best at what I do, and it has to be fantastic. And obviously you need to have an ambition, a little bit of vision, but then it automatically is one day it just comes true. Okay, this was the dream. But when you want that, you're aiming for the goal, you never get it. But when you're aiming for excellence, so that was very well said. So Radhika, I also wanted to ask you about your latest poem, which is doing very well, which is Kamaal ki dosti. Would you for us, recite a little bit of it, that whatever you want to say?
तो अब मैं लाइनें भूल गई हूँ, बट मैं एटलीस्ट उस पोएम का जेनेसिस बता देती हूँ. तो इट बेसिकली it talks about financial advisors, and it honors this community of financial advice. And the reason it honors this community is क्योंकि हमारे देश में we honor a lot of things. We have a day for teachers, and my mother is a teacher, so all respect. And we have a day for engineers and chartered accountants. And I think advice बहुत महत्व रखती है जिंदगी में. Advice is very, very important, especially financial advice. One of the things that we have seen in the financial advisory profession is because of Google, everybody believes that they can find an answer to financial advice on Google. And I'm supposed to be a Twitter influencer. Now every Twitter influencer will give you random financial advice. Itna Bitcoin kharid lo, itna ye. Finance is hard work. It's a technical profession, and money is hard earned. I loved what you said at the beginning about being qualified to be in the field of finance. It's a technical domain. And the reason we talked about this poem and Kamaal ka dost, and it really came from a close place because I wrote it myself, is that the work that financial advisors do is important. And financial advisor is not someone जो आपके पास आके is going to sell you a mutual fund at that point in time. वो दोस्त होता है. वो दोस्त होता है, एंड इफ यू गो थ्रू दिस पोएम, वो जिंदगी के हर मकाम पे आपका साथ देता है। वो आपका तब साथ देता है जब आप नौजवान होते हैं, विच इज द फर्स्ट पैराग्राफ, एंड यू आर जस्ट फिगरिंग आउट हाउ टू डू थिंग्स। वो आपका तब साथ देता है जब आप 40s में होते हो, शादी हो गई, home, you want to educate kids, you have liabilities। और वो आपका तब साथ देता है जब आप बुजुर्ग हो जाते हैं और आप आत्मनिर्भरता से, विच इज द वर्ड ऑफ द डे, रिटायर करना चाहते हैं। सो ही इज समवन हु इज विद यू थ्रू योर जर्नी, एंड इफ यूटिलाइज्ड राइट, financial advice can be a very, very powerful friend. So I think that was the genesis, and of course we always try to communicate things with a touch that is close to our heart. So that's where it came from.
And that's superb. Very well said, Radhika. And this is something I like to say to all my own financial advisors or all financial advisors who may be watching this. Hey guys, financial, this is, you're in an amazing, amazing profession. My father tells me one thing, when I joined the business, he was very subtle. He never told me, come join, we do this, we do that. Yeah. But he always used to tell me good things, which created an excitement in my mind. Now I realize that he psyched me into joining the business. So I wasn't like a typical other family business child who wanted to do something different. So he put it in my blood. But one thing he always used to say, and the first day I joined, he told me, he said, look, for a lawyer, he prospers when other people are suffering. Somebody has to be in a trouble. That's why he goes to a lawyer. He's talking about a normal lawyer. I'm not a corporate lawyer. So, today we celebrate when we go to a corporate lawyer because we are signing a deal. But similarly, on a doctor, doctor's profession prospers when people are falling sick. So point is, whereas our profession as wealth managers, financial planners prospers when people are prospering. Because when they have money, only then they come to us. So we are so blessed to be in this profession where people are coming when they are doing very well. And as professionals, it is very important for us to be ethical. So, a lot of time my team asked me, what is one, formula for success? I said, there is never one formula for success. Number one formula for success is that you have to do ethical. Second thing is you have to be intelligent. At the end of the day, you have to use your brain, or you have to study, you have to enhance your knowledge. And third is hard work or energy. That it is not only the heart, but it is the energy, how you do your energy management, how do you bring that energy that makes you successful. And for a wealth manager, a wealth manager today get paid 5 lakh rupees. Wealth managers today get paid 4 crore rupees. There is, we are living in a cylindrical work. And this is 50% of India's economy, the financial services virtually. So I'm not being, exact, but I'm just talking about abstract. But so it's such a huge profession, so many opportunities out there. All you have to do is be honest and ethical. But for clients also, that I feel that, look, you also have to validate what you get advised, and you have to see, you have to have that basic knowledge, because that's my belief, that it is when there is knowledge on both the sides, only then it works. So Radhika, talking about energy, everybody talks about Radhika Gupta's energy. And there is this story that I think you have talked about, that how in 2019 you made 50 trips to Delhi. So, please tell us about that.
Yeah, I did make 50 trips to Delhi, and I'll tell you about the digital part. So we won, I think, the Bharat Bond mandate, Sanjiv, in I think early 2019. Now I'm losing track of years. Yes, early Jan 2019. And it was, obviously, we were not expected to win the mandate because we were one of the 5 AMCs who were bidding, and there was a Mint article at that time that there's SBI, UTI, Reliance, and one more big AMC, और ये Edelweiss यहाँ कर क्या रहा है? Because one of the things that happens in life is that when the small guy tries to do something that's bigger than जितनी चादर है उससे ज्यादा आप पाँव फैलाते हो, तो पहले तो सबसे ज्यादा लोग कूदते हैं. So there was a big article in Mint, and anyway we bid and we won this mandate. Now everyone thinks that from winning this mandate, and today as we stand, Bharat Bond is a 30,000 crore program. It's a household name. Everyone thinks you win the mandate and suddenly 30,000 crores show up. It's not like that. I think the last 12 months, the 12 months of creating Bharat Bond, firstly, they were the best year of my career, single best year of my 15-year career. but working with government is hard. So yes, I did actually do 50 trips to Delhi at that point in time. It really helped that Delhi was my hometown, and it was just about working through this product with the government. So we studied different markets. We looked at what had happened in the US. We looked at what had happened in Japan. We looked at what had happened in Australia. So government wanted to very clearly, they put out a product after a lot of research. As my father later told me, government में कोई research के बिना तो होता नहीं है. तो पहले वो था. दूसरा, हम when we brought out Bharat Bond, बहुत साधारण product लाना चाहते थे, very different from what the government wanted, and we don't want to change our mind because we believe what is good for the consumer is good for the consumer, and if we have to fight our way through, we will. So I think 20 of those meetings were just fighting, and then this product is actually approved by the Union Cabinet. So it's not a fund you can file with SEBI and just launch an NFO. It's a product approved by the Cabinet. 19 ministries have to sign off, including shipping, power, housing, etc. And you have to convince each one of those ministries to do that. And that is not small work. I remember, Sanjiv, this is a really interesting story. We were 1 week before the cabinet approval, and I was not talking to my husband in this period or my parents. I was just so busy. And on Thursday, I got a call that Niti Aayog is holding this up. So they said, you have to go meet Niti Aayog tomorrow at 10 a.m. And I was in office in Bombay at 3 o'clock. Now, he said, आज की flight ले लो because कल सुबह की flight तुम ले नहीं पाओगे. Delhi में fog होता है at that time. So there's no way you're going to catch it. And so from the airport, I have just gone to the airport from my office, which is in Santa Cruz. I have just gone to the airport without any stuff. And this was November in Delhi. So I am wearing a cotton sari in Bombay because it is hot in Bombay. And I land at Delhi airport, Sanjeev, and it is freezing. And that is what it was. And, I did the meeting at Niti Aayog. They cleared it and everything was very nice. Incidentally, that night, I had to come back to Bombay because there was a major Edelweiss function and it was outdoors in Bombay. So I had to be there. So I was wearing winter clothes in Delhi. I wore my mom's clothes and I landed and straight from the airport went to Grand Hyatt, which is in Santa Cruz. And I was wearing all these winter clothes and I was sweating in this outdoor function. And that was, I know it sounds very trivial, but that was the energy of Bharat Bond. We really thought it was the opportunity to do something tremendous for the country. And as a leader, I'll tell you, that day Bharat Bond got cabinet approval, we heard कि उसके बाद finance minister की कुछ press conference होगी है with Prakash Javadekar, and it was supposed to be on citizen amendment bill, which was also approved with Bharat Bond. Incidentally, she did a 20-minute press conference on Bharat Bond, and to see your team standing in the hall watching her talk about your product on screen like that, it was worth 50,000 trips.
That's so amazing. So, part of the good thing about lockdown, is that you avoid these type of things. Because I remember we used to get a phone, okay, I'll see you in Bombay at this time, or I'll see you in Hyderabad at this time. And, you were waking up at 4 o'clock in the morning, running to the airport, coming back. Next day, you had a 9 a.m. meeting. So today, at least you can do those meetings on Zoom, and it has become acceptable whether you're doing Zoom or whichever technology you're using. So, Radhika, before we go on to our investments part, there is an interesting question this girl, Ritika, is asking. How do you go about attaining the right kind of knowledge? What do CEOs read, do? Books, courses, curriculum, experiences, amalgamation of all. So I will let you answer first, then I'll add my 2 bits to it.
So I think it's a great question. I think there is no right kind of knowledge. I think the right kind of knowledge is the right kind of knowledge that works for you. So people expect me, for instance, to be reading a lot of finance books, and they ask for my reading list. You will be surprised to know I largely read poetry and I read fiction. I'm a writer by pastime. So that doesn't mean that it doesn't work. I like to listen to a lot of TED Talks. I like to read a lot of small snippets. I find Twitter to be a great platform for learning. I do executive education, so I got access to some classes at Harvard. Last year, I did a writing class at Harvard in the lockdown because I want to improve my writing. So I think the spirit should be self-improvement, and don't say there's one right answer. So just because XY, the danger in this world, Ritika, is just because XYZ is reading these kind of books doesn't mean those are the right kind of books. think about your skills, think about what you have, think about what you're less good at, and then gradually try and pick up skills. So if speaking is what you're less good at, there's a lot of knowledge out there. If accounts is what you're less good at, there's a lot of knowledge out there. I think the spirit of learning is important, but remember that each individual solution is very, very unique, and there's no right answer for if I have to be a CEO, this is what I have to read.
Yeah, so I very well answered, Radhika. And my view is also similar. That see, you have to be doing something which enhances your knowledge, and but that doesn't mean that you have to be only reading what enhances your knowledge. Sometimes reading a fiction or watching something which is nice is also good fun. So for me also YouTube is a big thing. So I do watch a lot of stuff on YouTube, and for me TED Talks is a big thing. So even before I pick up a book, or even if I buy a book, before I start reading about that author or reading that book, I will go and watch one or two of his TED Talks. Because one, I will get a gist, and what I've realized a lot of times, I actually didn't even need to read the book, because the TED Talks are today so good that he would have given you the gist of what is there in the book, and you have got to know about it in 15 minutes. So so do watch the TED Talks. It will tell you about the topic. It will tell you whether you like it. It's an interesting concept. It's just about finding the right people, because today, even at TED, there's so many people out there. You just have to be clear that who do you want to hear. And so you have to choose the right thing, mix both fun as well as something that will add value to you, and make that fun. So, like, I am personally, last year I did a course from Stanford on design thinking, which is not my area, but I thought the future of business is design thinking, and it needs to be there. My next course was on digital marketing strategies with Kellogg's, one of the top professors in the world, Professor Mohanbir Sani, on digital marketing insights and analytics. And right now I'm doing my third course with a Kellogg's professor called Fabian Xavier, where I'm doing a course on data analytics, understanding data insights, how to make data talk to you. So it depends. And see, guys, you have to take out this time for your self enhancement. People think knowledge is equal to success. It is not. Okay, so knowledge has to be converted into belief, and then belief is equal to success. Like, suppose you're an engineer, you are not going to be a successful, but if you use your engineering knowledge to build a car, and you have a belief that I can build things, I can build a car, I can build a drone, and when you get good at it, you believe in yourself, is when you will you'll get to be able to achieve it. So it is very, very important to convert that knowledge into belief. So, Radhika, I think it's time we come to our investments part of this thing. So, what do you feel about the markets? That at this moment, what is happening with the economy? What do you feel is the next 5-10 years horizon on the market? And how should people be going about their investing journey?
So great. And before you start that, I'll just give you one plug since someone asked about reading. You should check out the inside section. Just like Sanjiv mentioned, TED Talks, we do book summaries, Sanjiv, of lots of books. And sometimes a 3-page summary also gives you tremendous insight as to whether I want to read that. And they're in audio and video format. So I just had to say that. I think on markets, Sanjiv, firstly, it is very, this I'm going to say the obvious, it is very hard to look at markets in the short term and make predictions on them. But I think when you look at markets and you zoom out, when you zoom in, themes appear very volatile in the short term. And I don't see why they won't be volatile in the short term. I think the short term today is very precarious. We are sitting in the middle of a second wave of COVID in India. We were sitting on the back of an economic recovery, and with uncertainty as to when the second wave of COVID will end, I think things are precarious. However, if I look out even 2-3 years out, or if I look 5 years out, I think things are a lot more moderated. And I am, at least, I've always been an India optimist. I'm actually very optimistic about the potential of the economy. And I'm optimistic because there are so many segments that are fundamentally so underpenetrated. I said this in a conversation on India's unicorns, that I think growth will happen, but it will take its time. Now, I think as far as investments are concerned, Sanjeev, it doesn't sound glamorous to say this, but the basics really work. The one thing that 2020 and 2021 have taught you is that the basics you were taught in investing work, which means asset allocation, which means holding good quality assets, holding debt, holding equity, holding international assets, maybe a little bit of gold, holding it in a proportion that matches your risk appetite, and just holding it consistently. I think that is the crux of any investment strategy, and that's what I do personally, and I think that works. So I think the basics of investing continue to hold.
That's superb. So, as we go forward, let's pick up some question also. There's a gentleman called UKM 4488. He's not put in his name, but he's asking about mid cap funds. So that's an interesting proposition for the people who are looking to invest. What do you feel about mid cap, small cap, large cap? How should people manage? This is a very common question, and a lot of people get lost in this. So I think let's take this up.
Okay, so I think if you look at a domestic equity portfolio, it has to have some proportion of large cap and it has to have some proportion of mid and small cap. And I think the calibration is based on risk appetite. We have, as Edelweiss, always been a little bit biased towards mid and small cap because we feel that today in India, the alpha creation really happens in the mid and small cap space because these are companies that you really see will become large companies of the future. The reason we also like mid and small caps more as a segment is because over the last 2-3 years, if you see how markets have evolved, large caps have substantially outperformed mid and small caps, in fact, to historical levels. That is likely to revert. And it's not that mid and small cap companies are fundamentally risky companies or their problems. They have seen an earnings derating. I think multiples have been derated, but the company's fundamental qualities remain the same. So I personally like mid and small cap investing, and I like the SIP approach to it. Now it doesn't always work out right because you do STPs and sometimes markets run up one way. But I think mid and small cap is a must as a part of the portfolio. And I think a staggered approach always works well in this category. I mean, I personally do an SIP into both our mid cap fund and our small cap fund.
Yeah. So I think, Radhika, it's very well answered. So guys, you need to have all in your portfolio, and each and every one of them has a different risk sort of on the table. For me personally, when I'm investing in a fund, for me, multi-cap is my preferred one because, I would rather let the fund manager take that call that which small, mid, large cap that he's going to invest in. So that is a part of my strategy. The second is that, you have to understand in India, it is the top 10 companies, I think, make more than 80-85% of the profit of the whole country. So how can you not be invested in them? Although their valuations may be running very, very high, your returns may be not that great, but these companies will keep growing. So, if you have a 10-year horizon, then you must have these blue chip stocks in your portfolio, and you must have somebody who's looking at doing this thing. Now, also coming to, again, what is my favorite topic is about international funds. And you are one of the first people who actually brought these international funds to India beyond the index funds. So how much allocation should you be doing to an international fund is a question asked by Anant.
Okay, so great question. I love international funds, and I'll answer this, and I'll also give you my approach as to how you should think about international investing. Is a topic close to my heart. So I think if you are done with your India debt and equity allocation, then you must have an international allocation. And the reasons you should have an international allocation, by the way, Sanjiv, is not because we made lots of money in the last year. That's a bad reason. In fact, I get very scared when people look at my own funds and say it up 80%, up 90%. That's not a reason. The reason to do it is diversification. The reason to do it is different countries do well at different points in time. And there are lots of themes like technology or healthcare, like all vaccine research doesn't happen in Indian listed companies. Indian IT is not path-breaking 5G and cloud and all Netflix, etc., etc. So it's for access, it's for diversification, it's for currency. I gave you my own college example. I think your portfolio allocation and advisor will guide. You can start with 5 to 10% and take it up to 30%. And within international, the good thing is, Sanjeev, there are so many options out there. People also ask me what kind of international exposure to have. I like to have some developed markets exposure. So you pick a US fund or a US tech fund or whatever. And I like to have some emerging markets exposure that covers a market like China or broadly emerging markets. So I think just as you said, large cap and mid cap are the two basic bread and butter of Indian equities. I think developed and emerging are that for international equities.
Yeah, I fully agree. I think Radhika, you have answered it really, really well. So don't, people, who want to sell jargon, say do 5%, 10%. You have to do what you feel is comfortable. For me, the way I think about it is we are living in a global economy. Today companies are not only going to operate in India, they're going to operate in the globe. So like Google is selling its services in India. Today on the digital side, it is one of the largest companies, even in India, or even Apple or even Samsung. So why, when these companies are coming to India and they are dominating the Indian market, then why should you not be invested in them? Earlier you could be. So today we are living in a global economy, and they are going to be companies which are going to have 30, 40, 50, 60% of global market share. Okay, so at the end of the day, you have to be there in those companies, and if they are not there, so my own personal objective is that my 30 to even 40% portfolio eventually is going to be international. So even last year, after talking to Radhika, I was slow to start. So at that time, I had not started my allocation, but today I've taken about almost 20% of my equity portfolio to international funds, and thanks to Radhika, it's given me very, very good returns. So for me, I'll tell you my own funds that I have picked up. So I picked up Radhika's US technology fund, which I really like, because they are trying to invest in the top technology stocks of the world. So so the companies that are going to make a difference, and we understand this COVID and all is bringing, is actually taking the whole digital revolution forward much, much more quickly. Like, could you imagine today everybody can use these video conferencing tools? Even our parents are so much better on technology than they were. So today, earlier 1 year ago, I used to get different likes. Today I get different likes. I get likes from people who are 75, 80-year old, and they are commenting on my posts. And so earlier you could not have imagined it. So I have invested in Radhika's US tech fund. I have invested in Radhika's Greater China fund personally. Then another one I liked was the DSP World Mining Fund. That is something I had invested in. And then the Motilal Oswal S&P 500. These are the 500 of the world's largest companies. And they have till last year had not performed that well. So last 1 year they have done very well. But before that, so I believe that there was some amount of performance, because they were more like value stocks. And so there was a lot of performance there in the next 10 years. And then finally the Nasdaq 100. So these are my personal investment, but there's amazing, exciting funds out there. You have to make it as a part of this thing. And here, let me also tell you a story. Okay, guys, look at the convenience of investing. A lot of people, like I have personally went out, bought shares, and through global trading accounts, but it is so complicated. You have to pay minimum balances, they square you off. I have made money where I went through maybe a more expensive route like Merrill Lynch or a bank, and where I had gone directly to these low cost brokerages and all. I lost money because I forgot to pay the minimum balance, and they squared off my account, and then this and that, and getting your money back and getting that LRS is so complicated. So don't get into that. Today you have these global funds available through good Indian mutual fund. Just choose convenience. It is very important. Would you like to talk about that, Radhika? How
I
convenience is important?
I so agree, and I'm so glad that you mentioned this, Sanjeev, because one of the questions that we get a lot with both our China fund and our US tech fund and the other funds that we run is inka expense ratio. Okay, I'll give you an example. We done this US tech fund which you had invested in, which has gotten very popular. Now, you want to go open a demat account, by the way, abroad, and pay the minimum charges and the currency conversion charges, etc. It's going to be crazy. The same fund, because of SEBI regulations, is at 2.25%. Now, this fund, by the way, is run by our partner JP Morgan. JP Morgan, if you were an American investor and a retail investor and wanted to buy this fund in the US, you know what you would pay? You would pay 5% between all the costs. India's regulations are so tight that the fund manufactured by an American company is actually cheaper for Indian investors than it is for global investors, coming with the convenience that you can start with 5,000 rupees, you just pay debt taxation. I think sometimes in investing, we don't realize the merit of convenience. You know, life is busy and chaotic. So at least investments should be kept simple. And in that sense, I think it's a great facility. And Sanjeev, now you have access to so many things. You talked about US and China. You have access to funds that do emerging markets. You have access to funds that give you access to global healthcare companies. I mean, you have all the kinds of access in the world sitting in India.
I fully agree with you. I lost so much money trying to be innovative. So I would recommend to everybody, please don't be innovative. Simple, convenient is the best. So Radhika, also let's take some tough questions. We have a tough question by, a lot of investors have faced issue in debt funds. So I think Madhusudan is asking a question that post Templeton fiascos, how safe or insulated are the common simple investor? Because most of the time, big guys escape, leaving simple folks high and dry. It is a really scares us, this thought. So obviously, we do understand where you're coming from, Madhu, and we understand the pain. And sometimes these things happen. But before I answer that question, I'll let Radhika answer that, because we have to take the bulls by the horn. These types of things happen. So what do we say to the investors?
So I don't want to give you a diplomatic answer, and I want to give you a correct and fair answer, because I also do understand the plight of, in that particular AMC, the number of investors stuck. I would say a few things to you. One, I know what has happened is unfortunate. I can't comment on it, but I would say that, as Sanjeev said, a significant part of the debt assets of the mutual fund industry, which is 12, 13 lakh crores, were not affected by that. That event was a single fund house event. Now, that event, and I am not going to judge the fund house, was focused on a fund house that had credit-oriented schemes. And one of the problems in fixed income, and I've been a fixed income investor, is that हम लोग FD वाले हैं, right, Sanjeev? We were used to going to the bank and saying, इतने साल के लिए इतना पैसा रखना है, इतना rate मिलेगा. In this much time, I'll get this much. I always say we take the fixed word in fixed income very, very seriously. If an equity fund is down 20%, chances are nobody is going to send you messages on saying this. Sanjeev, my equity fund is down 10, 20%. AMC is horrible. Is equity safe? Nobody is going to send you these messages. I think we don't appreciate the risk in debt enough. And I want to tell you that there are two kinds of risk in debt. There is duration risk. So even gilt funds have risk, by the way. And I wrote a long thread on this on social media. So people buy gilt funds thinking they're risk-free, not realizing that duration risk hai. And there is something called credit risk. I think when you invest in fixed income, at least our belief as an AMC has been that we do not want to do complex things in fixed income. We do very simple things, which is why we run programs like Bharat Bond, things that are FD-like in nature. We don't want to loan to borrowers for 12, 13% when the borrower is questionable and on 1% extra. That's not the business we're in. The only thing I would tell people listening is that do your due diligence when you do fixed income. And if you are investing in high quality fixed income funds, and there are tons of options out there, including very good passive funds, you will be absolutely fine. That I can tell you. If you choose to take extra risk in credit, please be aware that you're taking extra risk.
Yeah. So guys, there is, as they say, the reason good funds are able to give good returns, there is a risk element, and you have to understand that risk will always be there. So point is saying that, like the next question is that, even if debt can destroy equity capital, then equity can too. Again, Madhusudan's continuing question. Yes, equity can destroy wealth. There can be times when you're down by 10%, 15%, 20%, 30%. Imagine if you had invested last year in Jan, and by March you were down almost 25-30%, and people were panicking, but it has come back. Now you have actually made great monies in the last year. So when the world is panicking, you should be investing. And when the world is rejoicing, you should be selling. So it is, see, equities and investing does have an amount of risk. So that is why we talk about asset allocation. That, don't put all your eggs in one basket. Use PF, use NPS. They're amazing tools. NPFs is also equity funds with zero charges. Today people go to direct funds and they haven't done an NPS. I don't understand the logic. 10% of your salary is tax free. Why won't you use it? That is 35% return on day one. Okay? And even at that additional 50,000 rupees, please use it. So guys, is that today you have to build up sort of a portfolio. Today insurance companies are giving guaranteed return products at 6%, 6.25% IRR after all expenses and life cover. Why wouldn't I invest in that? I have personally bought it for my children. I have bought a product which I really like, that I am paying an X amount, and every birthday for the after 10 years, every birthday for the next 25 years, whether I am there or not, children are going to get a lump sum of money on their birthday from my side. Now this is, and I am an informed investor. I've calculated the IRR. My IRR is 6.1% tax free. I am very happy. So guys, you have to be happy. You have to be grateful. Let me share an example, Radhika. I don't know whether you remember, there used to be a product called Bima Nivesh from LIC, which
Yeah.
used to which promised an return of 9.9% tax free. So we had sold a lot of that. So I actually got one time, I got a notice, on legal notice by one person, because it had not delivered 9.9. At the end of the day, obviously the returns had fallen in 10 years and it ended up delivering 9.86. So the guy sent me a notice, कि please get that 0.04% compensated to me. So,
Ah.
so actually I wrote to him, I said, look, market returns have come down to 6% and you have still got 9.86 instead of 9.9. But that's an amazing, but if people want to find unhappiness, they can find unhappiness anywhere. So guys, don't, investing will have risk, and you have to look at the right fund manager, take it as fun. They will be tough times, and that's where you need a wealth manager, because wealth manager is a person who's there to guide you at the tough times, stop you from taking panic decisions. So many of my own friends start a SIP and then they say 3 years later there is no returns coming, I want to stop. And some of them even stop with, they don't listen to you. And then in 2 years, if they had been invested for 5-6 years, they would have been sitting on 20% IRR. So just point is that the markets will go up, they will go down. So you have to keep this thing. Okay, so now there's a next question is that people are asking again on debt, which is we want one last question on debt, which is debt versus FMP. What do you feel, Radhika?
Okay,
And
so
gold ETF. Let me add the gold ETF here only. So debt, FMP, gold ETF.
okay, so I'll give you answer on both. Gold ETFs I like. I think either gold bonds or gold ETFs are great. Gold bonds are good if you don't want liquidity. Otherwise, gold ETFs or gold fund of funds, much better way to hold investment gold rather than physical gold. So that's a quick answer on that. Debt fund versus FMP. I don't like FMPs because I think they are locked in, and this is my personal opinion. Okay, so they are locked in structures. I would urge you to look at a category of funds called debt passive funds. These are FMP like, but they are open ended. Bharat Bond was one example. There are others. They are low cost passive funds. They do what FMPs do, but there's a lot more transparency on the portfolio. On the day you invest, you know what the yield is like, and if you stay invested, you're likely to earn. So what do people like about FMPs? They like the predictability of returns of FMPs. Okay, I bought a bond and I held it to maturity. Target maturity funds do that, but they're open-ended in nature. So I definitely like that category a lot more. Perhaps it calls for one day a much more extensive conversation.
So people have also asked Radhika for you to explain about Bharat bonds.
Huh.
You have just talked about it slightly. Can you just explain it a little bit more?
Yeah, I think so. And so Bharat Bond is sort of India's first target maturity fund. And what does Bharat Bond do? So when you go to a bank and do an FD, What do you like about your whole FD experience is कि मैं बैंक पे जाता हूँ, 3 साल की FD करता हूँ, इस रेट पे करता हूँ, और चाहे RBI, whatever RBI governor does, whatever happens to interest rates, whatever happens in the world, right? I'll get my fixed whatever back. Bharat Bond aims to mimic that kind of experience. Their Bharat Bonds are series that mature in a certain year. That's why they have a target date. So you have a 2023, you have a 25, you have a 2030, you have a 2031. Going in to know what yield you're going to earn, you actually see it on bharatbond.in. You don't need to ask. So you see the yield of the portfolio. And if you are a hold to maturity investor, you will get that yield. So the way to use Bharat Bond now is just to see, do I need money maturing in 2025? Do I need 2023 money? Do I need 2029 money? And accordingly, I can allocate to Bharat Bond. It invests in bonds of highest rated public sector instruments. So this whole concern that all of us have around credit also goes away with Bharat Bond. As I said, Bharat Bond was a starter in this segment. There are now a lot of other structures. Like we just launched a 2026 product that is public sector and state in the index fund platform. So that's why I like this category. And I think Bharat Bond is like the simple debt fund for me.
Okay. Now coming to equity, back to equity funds. So there are a lot of questions, there are amazing questions that people are asking, and thank you everyone. So one of the questions, Radhika, we are getting is that, if you were to invest your own money, which Edelweiss fund would you pick up for your investments at this moment? And if there's people asking, look, if I have 15, 20 lakh rupees lump sum, how do I go about investing that? So how would you like to answer that?
Okay, so this is a tough question here because I think, again, Sanjiv, that is where an advisor comes in. How do you want to bifurcate between mid cap, small cap? How do you want to bifurcate between SIP and lump sum? And I also think it depends on your sources of income. So I'll give you my own example. In our industry, we are paid a monthly salary. So I bifurcate it into three categories. Just sharing a personal example. About one third goes into balanced advantage funds. I don't like large cap funds as much, but I like balanced advantage funds. About one third goes into mid and small cap funds via SIP, and one third goes into international funds. So this is my broad equity allocation. Then when I get a lump sum, I also mirror the same funds that I have in SIPL, and I have only about 7 to 8 funds in my portfolio. So I think how you want to do lump sum SIP, I think is a function of your own circumstances and your own cash flows. The one thing I will tell you that is a learning from COVID is it's very important to keep a contingency fund in place. Very, very, very important. And I don't think enough people do it. 6 to 12 months of contingency money.
That I agree. And that's where I say that, Radhika Gupta as a professional and a Radhika Gupta as an investor need to be separate people. And if you are Radhika Gupta investor is a separate person and you had been investing, that corpus becomes your second income, or it is your, cushion money. And I would like to go beyond, maybe when you're young, you need to have 6 months, but after that, you need to have, much more money overall. And obviously part of it, that money needs to be liquid also. Because when you look at investing, you need to also look at the liquidity of those instruments that you will be picking. So I will answer this question that you asked. Like one of my very close friends wanted to invest, and he had sold a property. He says, Sanjiv, I want you to personally get involved. And my allocation for him was also very similar: 25% to balance advantage, 25 to 30% to blue chip funds, another 20-30% in dynamic asset allocation, and last 15-20% in international funds. And what I told him is that come enter the market over the next 4 months. So I didn't want to make it over 6 months, 8 months. I did it last year and I've lost a lot of money on that.
Yeah.
So I said, look, 4 months is good enough for you to get a sort of a trend if you don't want to so this is what I will, this is my belief. But again, you must follow a proper wealth manager. Please take a proper wealth manager on your journey and it will be really helpful. So we have the time now to take one final question. So I think there's a very interesting question by Mr. Vasant Chinoy, which is quite relevant to a lot of people. He's asking for that after creating all the wealth in my heydays based on the advice, can there be a good retirement solution for my twilight years, which may not be as dynamic as my younger days? Now
I
this
think
is
that's a beautiful question.
yeah, it's a beautiful question. So, Radhika, imagine we are now beyond 60. How would you invest? How would you change your portfolio now then?
Yeah, no, and I have a 60-year, I have a father who's retired, and in the government, Sanjeev, retirement is a very big thing. I think the day you join the service, you're worried about retiring. So, हमने तो retirement बचपन से ये शब्द सुना है ऐसे कि ये बहुत भयानक चीज होने वाली है. So, I think there are great solutions for retirement, and there are many answers to it. But I'll tell you a few principles. So, one is, even if you're not 60, you should listen to Vasant's question, because retirement should be planned when you're 40 and 50, not when you're going to retire, if you want to plan retirement the right way. Because you can take more risk, as Sanjeev said, in your 40s and 50s. And gradually, you have to cut the risk in your portfolios down as you retire. I think when you have retired, your portfolio should naturally turn more conservative. That means either shifting more of your asset allocation to debt, or I like the idea of using these balanced advantage and dynamic asset allocation funds, because ultimately they keep an equity and debt balance and they shift between both of them quite nicely. So you can either do that, or you can have equity funds and maybe some of these kind of target date debt funds to manage your liquidity and cash flow needs, because in retirement it's also important that your ongoing cash needs are met. The other thing that you should do is, depending on whether you have post retirement income, in mutual funds you can use the SWP option really well. So we do this for my mother-in-law. She's single. She's invested in one or two hybrid funds. They probably return about 10 to 12% per annum. And हम उनके लिए we do an SWP of 8% in her retirement. So she gets a quarterly kind of income that meets her needs, and she feels nice that some income is coming home. So if the return of the fund is 10%, then 70-80% we take out via SWP, because she's been building up a corpus. So I think these are two or three suggestions I would have as you think about retirement.
Yeah, and Vasant, let me just add here, we as Bajaj Capital, as a part of our service to the society, have come out with a beautiful retirement planning tool, and which is we are offering it free of cost. So it will give you a complete 100% view on your retirement, how long will your money last, how much risk you should be taking, what are the various options between government bonds, securities. Like today, there are some very good retiree schemes available from Government of India, like Atal Bihari Pension Yojana and a lot of others. LIC is launching some schemes which are giving 7% plus sort of returns. So they are very good. You need to have a part of that in your portfolio. There are very good annuity plans available from insurance companies, which are immediate annuity, which give you a guaranteed amount of money. As Radhika again said, that you can do balance advantage funds and dynamic asset allocation funds. Also, I would like all retirees to also understand, good guys, you are not going to need all your money at one time. Other day I was talking to a retiree, and he had kept all his money in debt fund, and I asked him why. I said, do you need all your money immediately? He says, no. I said, how long do you want this money to last? He says, 20 years. I said, that's amazing, because today retirees are looking at least a 20, 30-year lifespan. So when you are a 20, 30-year investor, or even a 15, 20-year investor, then why would you not invest in equities? Why would you not have blue chip funds, into? So I think retirees, meaning that retiree shouldn't have an equity fund in your portfolio, again, is wrong. You need to have equity funds, because you need to be aiming for at least 9 to 10% return, which is possible if you do your asset allocation in a proper manner. If you want to be super conservative, then you can be looking at a 7-8% return. So, point is that even as a retiree, you need to take a little bit of a risk, have a little bit of equity, and maybe be more conservative. May only be in a blue chip, sort of an equity where the chances of going up are slow, and where chances of going down for the long period of time are also low. So you can choose accordingly. So, that's my view. There are a lot of other exciting questions, and I don't know how much, we don't have the time, and we are already above the time. But thank you. What we'll try to do is that we will try to offline make sure the team answers all your questions. So thank you everyone for joining today. Thank you, Radhika, for taking out time for talking to our viewers. I'm sure they got a lot of value to you, value from your talk. As one final thing, I think we must answer. A lot of people are asking, what are the international funds that you have on your kitty? So maybe we can answer that question as we say bye to everyone.
Sure. So thank you so much for having me, and it was great. Thank you for the interaction. Quickly on the international funds, we have six or seven today. I'll just run through the big ones quickly. We have a fund that invests in Greater China. That's called Edelweiss Greater China Fund. We have a fund that invests in disruptive US tech companies. I think it's probably the best in its category over the last year. It's called Edelweiss US Tech Fund. We also have an emerging markets fund, so it has that name. And then we have funds for Europe, ASEAN region, and a US value companies fund. Finally, we have a pharma fund that's a mix of India and the US. If you want more details on our funds, there is a ton of information on our website on edelweissmf.com. So you can check your historical returns, portfolios, sectors, notes, भर के information है. So you can get lots of that, and I would highly encourage you to do it.
Yeah. So thank you, Radhika, and thank you, everyone. My request to the team: please make sure everybody gets an answer to their questions. So even if we have not been able to take them online, but we must answer all the questions. So thank you, everyone, for joining us today. Thank you and bye.
Thank you.